Howdy MJ friends, we're going to look at the big five, the tier 2, 3, VFF, T-God, KHRN, KBEV, the big runner today, CURA, MedMen, NBEV, and IAN. Before I get into it, I want to talk a little bit about the sector as a whole and some observations today. So we've been noting how the correlation to the S&P 500, the correlation to CGC has been shifting. Money's been moving around. I talked in the video yesterday about sector rotation within the sector of funds as people are jumping around looking for the next best thing. But today we saw a glimpse of fear, and it didn't last long at all. But the S&P 500 had a glimpse of fear, and if you've been following the politics, we had the Cohen hearing, and that caused the market to dump initially. And then the market just slowly recovered the entire rest of the day. But when that market was dumping, correlations synced up to the S&P 500 very significantly. And today we had a bit of whipsaw action with, weakness in the morning and then a new high of the day and then straight back down to the low of the day, all within the first 10 minutes or so of trading. And then look at CGC here. This is the 2-minute time frame. And let's bring up and compare what we saw with what SPY was doing today. So again, just want to highlight that when fear kicks in and when we pull back, that is when we see correlations their strongest. And this is not the kind of chart I wanted, but you get the idea. Let's pull up. Bear with me. Different style. We're going to go with the bars. So the high of the day and the low of the day are within minutes of each other of the S&P 500 and CGC. We can see the bounce lasted significant amount of time together and then it just shifted a little bit. But again, very strongly correlated with that fear and with that relief. And it almost felt to me, I said this in the chat room, it felt to me like everything tensed up and everybody saw the weakness in the S&P 500 and the entire sector tensed up and started pulling back. And everybody said, oh, is this the consolidation? Is this what when we're finally going to see it? And then a sigh of relief as everybody relaxed and nope, bulls still got it. We're just fine. So want to, again, highlight the importance because I go around and I monitor social media and I see people talking about, the other day someone said, it doesn't matter what SPY does. It goes up or down and the sector keeps going up. It's great. But you look at SPY and no, SPY has not gone down. This is the weekly environment that we have been trading in for the last 10 weeks. So this market has done nothing but go up for 10 weeks. And when that changes, in my opinion, that's going to affect the overall market as well. And it also is another lesson where if you have started actively trading, day trading or swing trading more in the last 9 weeks and you think, I got this is easy, you're going to get a rude awakening. And I know a lot of people are watching this right now saying, yep, I learned how to trade in a bull market at MJ and then I got my shirt handed to me and I got the realization that I had no idea what I was doing. And it's the kind of thing where it's really easy to trade in this bull market and it's very forgiving. You make a bad entry and you can still bail out because it'll come back. But there's going to be a point in time where we hit the temporary top, the S&P 500 sees weekly consolidation, and that could potentially line up with some spring and summer consolidation in the sector. We've talked about seasonality before, but the point is that there's going to be a lot of bag holders created out of this environment because they're going to be used to buying bad entries and being in the red and then just anticipating that the price will come back and bail them out. And then one of these times it won't. And then there's going to be, like I said, a whole new generation of bag holders. So just be aware. Again, if there's one thing I can burn into your head, it's that the S&P 500 absolutely has a very significant impact on the strength of the MJ sector right now. And as long as we're holding up on SPY, which we still are, it's a bullish environment to be trading in the MJ space, but that is not going to last forever. So now let's get to individual names. Let's actually touch back in on the setups heading in. Now we'll go one at a time. CGC first. So daily equilibrium. And we're watching for our lower high to be set compared to 49.86. It doesn't look like that has been set just yet because the hourly uptrend has not been lost. We entered today knowing that consolidation was not far behind on Cron, CGC, and ACB and APHA. And the reason for that is because we ran straight up yesterday and the hourly time frame got overextended. There was no support established. We pulled back very hard today. We saw a bounce and we're now looking down at support of 45.50 and 45.09. If tomorrow we break 45.50 and 45.09, that's a potential indication that our daily lower high has already been set. And we've already made our bounce of just about to the halfway point into this tightening pattern. So we might have topped out at a lower high after just one day. It depends on what this hourly time frame does tomorrow, and we'll have to be watching closely for that. If that is the top and we pull back down, the odds of a bear break will be higher because we will be closer to that support breaking than we will to resistance breaking. But we have to see how this hourly trend goes. We need more information, and we need tightening ranges to give us clear breaks. Cron on the daily is very similar in terms of its tightening pattern. So high, low, lower, high. We form the higher low. And we're now wondering, has our lower high been set? And we have to see the hourly time frame. So again, we were overextended. We pulled back. Here's a support level. An hourly lower high formed at the end of the day. 2178 was resistance. And look where we rejected from. 2177 double top. And now we're pulling back, trying to form a higher low compared to 2070. So we have an hourly equilibrium. And how that breaks is going to determine what's the most likely scenario on this daily time frame. For Cron, we're still right in the middle of this pattern, and we have a little bit more cushion to work with. So in my opinion, if we're going to break bull out of these patterns, Cron's probably going to break first and give an early indication. And if we're going to break bear, CGC is probably going to break bear first and give us an indication on Cron. But it all depends on these tightening hourly patterns that are probably going to continue to play out into tomorrow. I played the oversold bounce today on Cron. I was looking for the psychological flush of 21 in the morning. And the reason I was using 21 is because of the, and I did sell on that one. So it was because of the 5-minute RSI, and the 5-minute RSI was extended. I zoomed out and I looked at the hourly time frame and I said, all right, we're pulling back into an area where we didn't have hourly support established. We are absolutely going to be looking for an hourly higher low to form and for a tightening range. So that had me confident enough to buy the bear break of $21 with my first entry scaling in. Where are we here? So back here, entered my first entry, scaling in as soon as 21 broke. I got filled in the 2190s. And I'm in the wrong spot in terms of which setup I'm looking for. So here it was. So we had the bear break. The 5-minute was oversold. And you might look at this and say, 5-minute RSI isn't oversold. What are you talking about? But when you're at the low of that candlestick, this is representing the close of the candlestick. When we were down at that low, that 5-minute RSI was down in the 20s. So a break is psychological. I entered in the 2090s. I would have entered more in the 2050s. We never got that low. And I scaled out, got my 20-cent day maker. And that was that. I was done trading for the morning, aside from managing my other positions. So that was Cron, and we'll see how the hourly breaks into tomorrow. ACB, I sold pre-market, and someone asked me, why are you selling ACB pre-market? And my answer is, look at the hourly time frame. It's done nothing but go up for 2 days in a row with no consolidation. We're extremely overextended after running 14%. The risk to reward is not good for where we stand right now. So I'm going to lock in that profit pre-market in the 780s, and then we saw profit taking first thing, pulled all the way back, and now we have an hourly lower high at 765 to be watching. And just like everybody else, CGC and Cron, we're going to be watching, are we going to change this hourly trend with a lower high and lower low, or can the bulls hold 745 tomorrow morning and give us a tight hourly equilibrium into the afternoon? And the daily time frame is a bit of a different setup, but we will still look for a daily higher low. Even if that hourly equilibrium breaks bearish, we're going to look for a daily higher low compared to 689 to keep the daily higher low intact for these bulls. So exited ACB pre-market. And here's a scenario where exiting ACB pre-market was a great decision, but exiting OGI after the open was a poor decision. And they pretty much balanced each other out for me. But we'll get to OGI in just a second. APHA, tight range. We did break the high of yesterday, but no follow through. So we have now 4 days of tightening range to be watching, which is a bit of a different setup than everybody else. So looking at that on the 4-hour time frame, we have our high, low of the pullback, and a little bit of a double top. And there's another support down here at 993. So the most important support is 993. We did get a bull break at the end of the day, but no follow through behind it. Resistance is going to be 1035 and 1059. So bulls fine as long as they keep the hourly uptrend in their favor. And we have more space to hold the hourly uptrend here on APHA than we do on most of the other names that we've looked at so far. So keeping an eye out on these hourly setups for the most clarity heading into tomorrow. And right now, it's a very unclear scenario. I mean, we've got our daily equilibriums on CGC and Cron. That's very clear. But in terms of the short-term setup, it's not that clear. And when the short-term setups are not clear, we pump the brakes. We do not trade as aggressive, maybe smaller stacks. We trade less often. We're more picky. We wait for the trades to come to us. Oftentimes, there's very clear setups. Yesterday, had a ton of clear setups. Today, not so much. So yesterday, I made 3 or 4 trades, and I could have made other ones if I was going in overdrive, but there was too much going on. Today, I made the one trade and was pretty much, well, that's that for now. For me, on the major names, I don't see any clear setups that I like. TLRY still watching the weekly as it continues to tighten. We've got resistance up in the 80s, double top the last 2 days. And key support is now 76.60. If we break 76.60, we lose the daily higher low pattern. And if we break 83.10, first we have to break 80.55, but then 83.10. I'm just watching Cron on the weekly. That's all I care about is the weekly tightening range. We're still within it, and it's likely going to break sometime in the next 2 weeks. Although earnings are, I don't know the exact earnings date. Earnings might be the catalyst for the break here. I have to double check that, but watching that weekly pattern. OGI, so in the video yesterday, I said, don't you guys know about Blue Sky Breakout? And it was clear now, in hindsight, well, now that makes sense. We get dilution news in a lower open. So not sure I agree with the timing of the company whatsoever. Yes, absolutely, you want to raise funds when your share price is high and you get the most bang for your buck. But, what would VFF have been doing over the past 2 weeks if the first day of Blue Sky Breakout, they put out dilution news? And the answer is it would have put a brick wall in front of their run, and they would have seen way less gains, in my opinion. They would have recovered, and they probably would have seen new all-time highs, but it wouldn't have been anywhere near that strong of a move. So, in my opinion, that end of the day, very unusual selling, as opposed, you have your Blue Sky Breakout, your setups there for a strong close and continuation, and you see significant profit taking. It's people in the know, selling, knowing that dilution news is coming, and it is people reacting to that and saying something's not right. And we had members that were selling at the end of the day or, trimming their position because of that little bit of uncertainty. So that's an example of a little bit of a clue. I did not act on that. I did swing my position. The bulls bought the dip. We double bottomed, lower high, higher low. Bull break was 827 after the double bottom to change the trend back in favor of the bulls. And we recovered all the way to the all-time high, but we gave it all back with another end of the day dump. So OGI is now gaining this reputation with us traders that it is a jerk. And it's going to dump at the end of the day after Blue Sky Breakout. And we are not used to that. We are used to strong closes and continuation. So obviously we're protecting trades and not getting taken to the cleaners here, ideally. But this is going to affect the psychology of Blue Sky Breakout because it's not enough to keep these bulls strong. And there is a ton of profit taking. So it is still an hourly uptrend. 815 is support. Anything above that is an hourly higher low. But we've pulled back 5+% from that all-time high. And it's going to, if we do bounce and hold 815, we're probably going to look for an hourly lower high to be set. So awesome recovery for the bulls. And like I said, I did sell this morning on that weakness just to go back to all cash and start with a fresh, clean slate after a solid day yesterday. But gave it all back here at the end of the day yet again. So OGI, not a trader's dream at this point. TRST, very tight. Break anticipated tomorrow. Key level is 1186 and 1173. And there's even a better support, $12. So 12 first thing. If 12 breaks, the odds of a bear break of this daily pattern will increase. And the key resistance is going to be 1229, 1238, and 1240. So there's 3 supports and 3 resistances as we're very tight. Bears have a tiny upper hand, I'd say, because we are closer to support than we are to resistance. And if we do get the bear break, we zoom out to the daily and we look at the low of 1173 consolidation, and we're going to just look for a daily higher low to form somewhere in the lower $11 range if we do break 1173. So 2 days left. Don't think all-time highs are coming, so no potato eating on video for me. But this is a tight pattern to be watching into tomorrow because we're going to get some clarity. And again, the tight patterns with their breaks are what I look for clarity. And while these tighter patterns are trying to sort themselves out, like Cron and CGC today, I sit back and wait for them to get tight and then try and play those breaks. That's just the style that I find the easiest and the most clear. Hexo, looking for the daily higher low to be established. We need the hourly trend change to give us that indication. And at this point, we bounced off the low Anything under 769 is just an hourly lower high. And right now, we're going to anticipate that we're going to form an hourly lower high compared to 769. So in order to change the trend from here, the bulls are going to have to see a bounce, set resistance, need to set a higher low, and then change the trend. And it's not necessarily convincing that our top has been set just yet at 744 here. If we pull back tomorrow and break 735, then we'll say, yes, our hourly lower high has been set. We need to hold 723 and then break that level. So we're looking for the hourly trend change to indicate that the daily higher low has been established. But because of the size of the pullback at this point, we know that when that hourly trend does change, we're unlikely to head right back up to 809. It's too significant of a pullback for us to be looking at those kind of continuation gains, or I should say gains to see continuation. We're going to look for a daily lower high to form if that hourly trend changes, and I would be looking perhaps in the 760s to 770s for that daily lower high. That's looking a bit out in the future, but that's just me looking at the most likely scenario. If the hourly trend changes, the most likely scenario is a daily lower high under 809. VFF, also very tight, worth watching tomorrow. 1272 and 1261 are our key supports, and resistance is 1316 and 1365, and then 1372. So the bears have a slight edge. We're closer to breaking support than we are to breaking resistance. Even if we break bearish, we can still see a daily bull flag. Best case scenario for the bulls, if we break support, is to see a lower wick on the daily candlestick and bulls buy that dip. And that's the scenario where we get bear breaks and no follow through, that we zoom out and look for the potential of a flag. So this is still extremely healthy consolidation on low volume, and it's just a question of whether the bulls are going to attempt continuation tomorrow or whether we need further pullback down into the mid to lower $12 range on the daily time frame. T-God, gap up and profit taking today, so unable to break 432 resistance, and it looks like there is potential for a weekly tightening range. If we cannot break 3 or make that 432, we could stay in this weekly tightening range for another couple weeks. At this point, we're looking for a daily higher low compared to 364 to keep the uptrend intact. But if we lose the daily uptrend, weekly tightening range and equilibrium is what we're going to be watching for. So just like everybody else, we need the hourly here shows clarity. So 385 key support, 399 key resistance. If we break 385 tomorrow, we're still pulling back on the daily chart and looking for the higher low to form. If the hourly chart breaks bullish, that would be a great sign that we're going to head back up to the 409 recent top. But with the amount of volume we saw today, it does look like we might need a bit more pullback to form that daily higher low. KHRN, daily higher low established, hourly trend change, not confirmed, certainly breaking a bunch of resistance levels and solid volume and a clear shift in momentum. But we need the hourly higher low and higher high to confirm the trend change and to make our way back up to the recent top on the daily. Same thing here. I would anticipate a lower high compared to 435 is the most likely reaction from here due to the size of the pullback and the amount of bear volume behind that pullback. This kind of pullback with this volume is very different than the one we saw here. Easy to see continuation from here, hard to see continuation from here. So need that hourly trend change confirmation, but just like Hexo, we are going to look for the daily lower high compared to the recent high. KBEV, so this one is, you got to be cautious. It's a penny stock. I haven't read the financials. I assume it's a bit of a pump and dump just because it's almost like a secondary service that they have. They're, a holding company for a company that's selling CBD products, and the news was, the deal with Walmart, and they're trying to expand in Colorado and the States. So it's got all the buzzwords and it's got the hype and the story, and you run like that and you're going to get a lot of attention. But you look at the weekly time frame, it's a red flag that we just pulled back for all these months. And, it took this kind of news release to actually see significant follow through compared to what the rest of the sector has been doing. But it's a hype momentum bull play, and we know those can run very strong. So 94 cents, $1, and then blue sky breakout is after 105. As far as support goes, we established a nice 15-minute equilibrium before the bull break. High, low, lower high, higher low was 74. Bull break was 80, and we went, 17% over that level into the end of the day. So very nice supports to watch. 74, And 66, it can absolutely keep running, but just be aware that this is one of those names that when the top is hit and the run is done, we will pull back 25% very quickly. So again, that's a scenario where you don't want to be left holding that bag and just assuming that it's going to come back and bail you out, because there's a chance that it might not. So very strong close, very strong volume, probably going to see blue sky breakout on this run, but need to break resistance first thing, 94 cents tomorrow, to give confidence in that continuation. CURA had a strong start to the day. It had everything the bulls needed in terms of volume, breaking key resistance of 1054 and 1068, but we didn't get the strong close. And the profit taking in the morning was a red flag. It's still an hourly uptrend, but we got the hourly equilibrium to be watching now. High, low, lower high, and we're looking for a higher low compared to 1027. So an hourly equilibrium, potential play off of 1027 support. And then if this breaks bullish, we're looking up at the all-time high, 11, and then the all-time high after that, which is up at 1149. And if this hourly equilibrium breaks bearish, then we zoom out to the daily time frame and then look for the potential of a higher low to form again compared to 1007 and 1008. So it's a bit of a red flag. That pullback after the strong start, let's look at it on the 15-minute, just a half hour of bullish action followed by an hour and a half giving it all back and then some. So hourly equilibrium on watch for CURA, another hourly clear pattern like a whole bunch of other names we've looked at so far. MedMen, inside bar, indecision doji, and we need to see what earnings does. So we're going to be watching resistance of 439 and 447. Support is 424 and 421. And if it is a bullish reaction to earnings, we're going to be looking up perhaps at the recent high of 506. If it is a bearish reaction, then our weekly lower high will be set compared to 506, and we'll be looking back down at 360. And NBEV, nice dip buying, a lot of oversold action here, and this is one where the patience paid off. Look at how clear this 5-minute pattern is. Just lower high, sideways trading, bottom fishing play, and then once the break occurred, you had all the opportunity in the world to enter at 525 to 527 and put your stop loss below 523, and then we shoot up to 557. So that's beautiful risk to reward. Let's say I enter 10,000 at 527 towards the upper end of this range, 528. 5,000 or $52,800. I'm risking $600 with my stop loss, and the reward is $3,000. So if your risk is $600 and your reward is $2,000 to $3,000, that's the kind of scenario you want to be putting yourself in terms of risk to reward and calculating that out. So nice job for those who played the bounce. We are just looking for an hourly lower high for this bounce to get any meaningful follow through. We will need the hourly higher low and then continuation move. And then if we get that, we'll zoom out and anticipate a daily lower high will form. But we need to confirm the hourly trend change first. IAN getting real tight. Break is imminent with a volume spike here as well, as the volume has dropped off 4 days in a row. Break of 754 and we look to 746. If the bulls can break 770, we look to 778, which was a recent double top. And this is pretty much going to dictate whether we're heading up to try continuation over $8 or whether we need further pullback. And we have to be cautious of this weekly time frame because we are due for consolidation. Haven't really consolidated. And if you look at SPY, there's a lot of correlation with SPY over the last 9 or 10 weeks. So going to get interesting on IAN to wrap up the week in the last 2 days. We're going to get some direction heading into next week, and we'll see which direction that momentum is heading. That's it. Hope you had a great day. Again, we will remain. I'm going to continue to give the heads up that we need to be watching SPY because, in my opinion, if we are going to see a spring and summer lull, it will be marked by SPY weekly consolidation. That being said, SPY could give us a bull flag. And if SPY gives us a bull flag on the weekly, we're looking at all-time highs. So, if this weekly consolidation pulls us back to the low 270s, and then we just see continuation, all-time highs right there. And if we can get the S&P 500 in all-time highs, I'm sure many of you remember what the MJ space was doing in Canada when we were blue sky breakout in the market and the individual names. That's when money was growing on trees. That's a possibility, but until we get a weekly higher low, we must remain cautious. We'll see you tomorrow. Do good things.